Vanakkam viewers, welcome back to Aussie Tamil Morasa. Today we have with us Rajiv Agrawal. Hello Rajiv.
Hi.
Rajiv Agrawal is the proprietor for A&J Accounting and Finance located in Blacktown. Let's welcome him and talk to him about individual taxation and how taxation works and how can we file tax returns in Australia. Hi Rajiv.
Hi Shankar, how are you?
Fine, thanks. So, can you please tell us about your organization, what you all do?
We are here based, the name of the business as you told is A&J Accounting and Finance. We are based here in the Western Sydney in the suburb of Blacktown in Main Street. We have been here for practicing for almost 10 years. We look after individual tax, company tax, self-managed super funds. Then also we do have a finance division of our business which looks after the lending requirements of our clients, like we also do home loans, business loans, equipment loans.
Okay, so you're not only in tax returns or taxation, but also into finance and helping people in acquiring loans and other things.
Loans and equipment loans, whatever is the funding requirements of our client base, and even if someone comes off the street and they want to have some financing requirements, we look after that as well.
So like a finance advisor.
Finance broker come advisor.
Okay, good. Welcome and thanks for letting us or giving us a chance to talk to you about individual taxation today.
Sure.
So that our viewers will get some knowledge about what can be done, what should not be done when we do a tax return.
Definitely.
Thank you. Thanks, Rajiv. Okay, viewers, let's go to the first question now. As I said earlier, we are going to talk about what has to be done and what need not be done and what should we take care when we do tax returns in Australia. So we have a few questions which we'll be asking Rajiv, and he'll be giving us the right answer for those questions. And if you have any more questions, you can comment on our video and we'll try to get the advice from Rajiv and reply back to you all in the comments. So the first question what we like to ask is, Rajiv, that everybody knows taxation here, and everybody knows that there's something called as receipts which we have to maintain. Exactly. So the first question is, how long does the taxation office expect an individual to hold the receipt on with them?
The Australian Taxation Office, any expenses or any claims you make in your tax return, they expect you to have a substantiation requirement, which is in a way what is the question exactly. Then you need to have the tax receipt and any associated documents for filing your tax returns for a period of to 5 years.
5 years. Okay, so when we're talking about this tax receipts, is credit card receipts accepted as a taxation document, or which we can show it to the office, or?
Not exactly. So basically if you say that the credit card receipt, that's a proof of payment. But we need to have the tax invoice of the item we are exactly claiming. So in a way, we are required to have the tax invoice as well as the tax receipt, like a credit card payment or a bank transfer, to substantiate your claim.
Okay. So next question what I'd like to ask you is, for example, I am working for a company and the company requires me to wear a type of a dress, right? Or I'm working in an office and I need to have like a suit, or let's say good costume, professional attire for my work. So is that tax deductible, or can I claim against it?
Not exactly. So as per the uniform or the presentation goes, Australian taxation have got strict guidelines. For any uniform or any item which you use to make yourself presentable, it has to be coming under one of the 3 categories. Either it has to be like compulsory, meaning having a business logo, or it has to be occupation specific. For example, the check pants, which is used by a chef, or it has to be of a protective nature, like the high visibility clothing,
or like the
PPEs by the
PPEs,
trades,
okay.
or a hard hat, which people have to wear on the construction side.
Okay.
Just in very limited circumstances, if you have to be looking presentable, it's a very important part of your occupation. For example, air hostesses or a model, they could be allowed the cost of showing themselves presentable or using makeup.
Or because that is part of their profession.
Yes, exactly.
It's related to something.
It has to have a direct nexus between your income earning activity and the claim you are making.
Okay, good to know that. So, Rajiv, the next question what I wanted to ask you is about travel expenses. So 2 things. One is local travel. Example, I go to work, and I travel, so is that taxable or tax deductible, or can I claim anything against it? The first question. And another thing is, if I travel overseas for any travel, let's say I'm going for a leisure, and during that time I attend some conference which is related to the work, can I claim anything in tax for those two? So one is the local domestic travel, and the second one is overseas travel.
I'll give you the answer in two different parts.
Yeah.
Because as per the local travel goes, anyone, and a lot of people have confusion around this, anyone who travels from home to work and back, that is of personal nature. So that is totally not tax deductible. But travel expenses are allowed to be claimed locally when if you're traveling between the two offices of the same employer, or the only incidents when you can be allowed to claim the travel expenses from home to work if you're carrying bulky equipment or tools of trade which are required to perform a particular job.
Okay.
Then in that instance, travel expenses from home to work are claimable, otherwise not. If you travel, for example, if you have two jobs, if you finish one shift at one job and you straight away went to the second job to start work, that can be tax deductible. So you need to have proper record keeping for that, how many kilometers you traveled, or you need to have a logbook if it's a usual part of your work to work out the expenses you want to claim for traveling.
When we talk about this local travel, let's say there are a few companies who pay for the travel. For example, a company would pay, let's say, 90 cents or $1 per kilometer, which they get it from the company.
Yes.
Even if when they get it from the company, can they do a tax claim?
Exactly. So what happens when you get an allowance from your company to travel, that makes it more obvious because that travel allowance is listed on your payment summary as a taxable income. So that you have to make deductions against to offset that. Because normally we have seen these allowances which are given to the people for traveling for work purposes like visiting clients or performing certain duties like banking or traveling between the various locations of the same employer gets added to the income.
Okay.
So if they don't have a claim against it, they will end up paying tax. So in that circumstances, you have to keep a logbook or you have to keep a log of how many kilometers you have done in order to offset that.
Okay. So coming to the second question about the international travel, how is that?
To be honest, if you're mainly going for a holiday for like I said a period of 10 days and then that seminar was just an incidental, you can claim the cost associated with attending that seminar as long as that seminar can be connected to your work activities.
Mm-hmm.
But then it will all be proportionate. If it's not a pre-planned one and if you only did it, maybe only the cost of attending that seminar can be claimed. But if it was a planned seminar which your work has sent and holiday is also a part of it, like I said, if you're going for 10 days and the seminar was for 3 days and you were not living at your residence, you have to go to another city to attend the seminar, you have to proportionate the expenses. So like say 3, so you can claim 30% of the overall expenses what you have incurred.
And you have to have a proof of showing it if there's a question
Very
asked.
important because this you'll have to be very much ready how you will show the nexus between that seminar and your current work activities, as far as you have to have a proper record keeping of how you have worked out those claims and how you have apportioned those expenses.
Okay. So another quick question is, many of them have this in mind, especially the Indian community here, is many of them have property in India or they have houses in India which they have rented it out.
Yes.
And they get a regular income of that. Is that rent to be declared here or should it be shown in our income during the tax returns?
Definitely. So once you become a resident for tax purpose in Australia, you have to disclose your worldwide income, whether it's an interest, whether it's a rental income from your property overseas, or whether it's an interest on a foreign bank account, or if it's a foreign pension, or if you're receiving dividends from foreign shares, any source of income, you have to disclose it in your Australian tax return. Depending on the tax treaty, Australia has got double tax treaty with certain countries. You might get tax credits. For example, if you have already paid a tax on that income in an overseas country, what you will need to do, you will need to disclose that income, plus you can get the tax credits for the amount of tax already paid. So you don't get double tax.
Okay.
The idea is, the Australian government wants you to be taxed at the marginal rate. When we say marginal rate, so for example, you have got a salary of 80K and then you got a 5K of rental income, $5,000 of rental income, that gets added on top of that and you pay the tax according to your marginal rate.
Okay.
And you do get a tax credit for the amount of tax already paid.
Okay. So that you're telling it one way it's necessary to
It is
declare-
compulsory.
Compulsory
It's
to declare.
illegal not to disclose
So it's
your
illegal.
income.
Okay. Another question was, if the people, example, there is some foreigner or people from India, let's say, they have decided that they're going to come to Australia, and while coming, they bring amount or money with them for their starting of their life here or something like that. So is that money taxable?
No. So what happens if people are bringing the money is pretty much like their savings. It's not their earnings. So that savings has been already taxed back in their country. So if they're just bringing their savings or the residual income which they have to start up their life and all, that is not taxable. But once you have that money here, and if you put that in a bank and you earn interest on that, that will become taxable. But not the basic capital itself.
Okay.
Because it's already been taxed.
Okay, so that's good to know that. So it's not a thing where you have to declare it or to the tax office that you have got some money from overseas for your some other settling down expense, let's say. What about in between? Let's say we have migrated for 10 years and now you have some savings in India and which you wanted to bring it here. How that is catered?
Again, it will be a question of like how much you can prove it, and what means normally if that money is already just your savings, so that is not your earnings as it going. So suppose that money is sitting in a bank account in India and you're earning interest, you have to pay the tax. But if it's just your savings, or you've sold a property, or if you have got inheritance on which the taxation has already been accounted for, or that was a primary residence back home and it was never used for income producing activities, you don't have to pay the tax on that. If you just bring your tax paid money back.
Paid money back,
Exactly.
so you don't need to declare it here for tax purposes.
Exactly.
Okay, let's say you're here and you get married. Once you get married, what steps you have to take in terms of tax returns? What should you do when you get married?
So once you get married, for example, prior to get married, you are filling up a tax as an individual person, like as a single person. But there is a spouse section in your individual tax. So once you get married, you have to give the information about your spouse and their income in the spouse section of your tax return, because it can affect a lot of it can affect the certain aspects of your tax return. For example, your spouse income has to be accounted for in calculation of Medicare levy surcharge, or how much Medicare levy you have to pay. In exceptional circumstances, if you're a family and your income is below, if your family income is below a certain threshold, you don't need to pay Medicare levy. On the contrary, if your income was low, but you married someone whose income is decent and is much more, which can put you in an income threshold, let's say for husband and wife more than $180,000, and you don't have private health insurance, then you have to pay for surcharge, which if you don't disclose, suppose you did your tax and your wife did the tax separately somewhere else, and later it comes, ATO brings the information together and you guys don't have private health information, you can end up with a tax bill.
Oh, okay, so there'll be, is that penalties or something related to
It
that?
depends. Australian Taxation Office takes these in a very, what you call, educational way. They don't just, the idea is not to penalize you, it's more about educating.
Educate you to not to make the mistake next
So
time.
it's really important that where are you getting your tax done from? Or if you're going, because there's so many people here preparing tax and all, who might not have the exact knowledge or no. So it's very important to choose the right tax agent to perform your
returns.
because you're giving an important part of your life, an important aspect, your financial affairs to someone, so you want to give it to a knowledgeable source.
Yeah, that's right. Next is once we talked about the marriage, let's say you're studying something, some extra education,
Yes.
is that taxable or tax deductible?
Again, it depends. There is very strict rules about it. So self-education expenses are deductible in your tax return as far as you fulfill the legal requirements for that. If you are doing some studies to get a job, that won't be tax deductible. Suppose I'm studying accounting. Before I was in the accounting profession and I want to claim that in the expense once I get a job, that is not tax deductible. But if suppose I'm already practicing accounting and I do a masters of accounting to improve my skills or to gain more knowledge which might increase my income producing capacity. In that situation, you can claim the self-education expenses and also the incidental expenses with that.
Oh, okay.
So whether you're traveling to uni or you're buying books or the internet expenses while you're studying yourself.
All those are.
So again, but there has to be very strict requirement. There is very strict rules about it. So you have to meet the criteria, and the course you're doing should be in direct nexus with your current work
Income
activities,
generation.
income generation activities.
Okay. Okay, good. And also the other question when we relate to the studies is about the membership, let's say. Example, I'm a professional and I have a membership of Institute of Engineers or any other association which is related to the profession.
Yes.
Is that also claimable?
Definitely. So suppose if I am an accountant and I have a membership of CPA, that is tax deductible. If you are an engineer and if you pay for the membership of Engineers Association of Australia, it's tax deductible. So the professional association fees, union fees, these are all tax deductible.
So Rajiv, the next one is about child care. So many of the parents here, and we have seen that most of them who migrate from India or overseas, they come here and start a family and they have kids. Once they have kids, the cost of child care and the cost of child's education, is there anything which can be done or which is advantageous for people of the cost of this one?
Child care expenses or the education of the child, none of these expenses would be tax deductible because these are more of the personal nature as per the Australian taxation law. There are certain rebates available depending on the income bracket your family falls, means they consider your income and your partner's income to see if you're eligible. So the government does contribute towards the cost of childcare. But as once it's coming to the tax return, there is no deductions, unfortunately.
Earlier, few years ago, I heard that, example, you buy a computer or something for a child education, that was earlier tax deductible or something?
Few years ago, there was a thing called education tax refund.
Okay.
So the parents were able to claim up to, I can't remember exactly because it's been a few years, they already stopped it because there was no clarity around and there was a lot of errors happening by the taxpayers. So now they moved it to the Centrelink. So Centrelink automatically determines the eligibility and based on, because there were certain requirements that you should be receiving a part family tax benefit part A or B in order to be eligible for that. And there was also that it's only for students for up to class 10, but some of the people who are going to TAFE or tertiary education, they were also claiming it.
Okay.
So there used to be a tax offset which used to minimize your tax depending on how much you have spent. You bought a laptop or books or stationery, you were getting around $750 or for each child, for a high school child and $375 for a primary school child, if I'm not exactly wrong.
Yeah.
But it was removed after a few years as there was too much confusion and they channelized it through the Centrelink.
Okay.
And maybe it's not there anymore.
Yeah, okay, so it's all gone. Yeah.
So there has been a lot of changes in the past few years in the taxation system.
Okay. So next thing is, if I'm unemployed, let's say because of this COVID, we have seen so many cases where many of them have lost their jobs. During that time, can they claim the money which they have spent while job seeking for attending interviews or internet charges for applying for jobs and all, is that tax deductible?
Unfortunately not, because a lot of people ask us this question. It's not only about looking for a job. Even if you are studying something to get a job, or if you have to do a course to get a job, it's not tax deductible as per the Australian Taxation Office. There is a particular term, it's at a point too soon. So you have to be in the relevant job or occupation in order, and then you do a course for further enhancement or improving your knowledge or skills or to gain promotion. It can be tax deductible, or while you're performing, suppose you are a bobcat driver or you are a truck driver and you do a upgrade course to go to a bigger truck, that can be tax deductible. But unfortunately, the cost to get a job or to train yourself or for preparing yourself for interview is not tax deductible.
Okay. Now, let's talk about salary sacrifice or superannuation.
Sure.
So, if a person decides to put in or chip in more money into superannuation, how does that work with taxation?
So you're talking about not the compulsory SCG guarantee which the employer is supposed to contribute, which is 9% of your income. We are talking about if people have the right cash flow and they want to build up their super, or people who are in a very high tax bracket, they can choose to put extra money into the super to save the tax. So, for example, you put $10,000 into the super. So that gets taken off your gross salary and you don't pay the tax on that in your individual tax return, but super pays a tax of 15 cents. So there could be a substantial saving depending on what tax bracket you are in.
Okay.
There can be a couple of ways of doing that. You can do it as a salary sacrifice. So then what happens, it gets taken off your salary and it gets paid into your super through your employer. Or with the new changes, now the government even allows the salary people, they can make a lump sum contribution before the end of the financial year into their super fund, but they have to fill up an intention to claim a tax deduction and submit the form to the superannuation provider so that ATO can be notified of that, and then we can claim that as a tax deduction in the individual tax return as well.
Okay. Recently, I think most of us have heard about this during this coronavirus crisis. There was an offer, or there was an announcement saying that people can take money off from superannuation, and there was some regulations around it of
Exactly.
who can, who cannot.
Exactly.
What is your view on that, and how are things going with that?
So what the government basically did, normally you're not supposed to touch your superannuation money. There is only very like if you're going through financial hardship or you're going through extreme financial pressure, you can apply to the super fund on certain compassionate ground for release. But because of COVID-19, again this is unprecedented times, so the government allowed individuals to dip into their super fund for up to amount up to $10,000 before 30th June this financial year, and another $10,000 before 31st December this financial year.
Yeah.
But obviously there is rules around it. It is a self-declared process. So what I have observed, a lot of people are not understanding, and even because you just have to go online and make a declaration. But people are taking, some of the people are taking it as just a dip-in measure to take the money out of the super, which is not a good idea. The government has got fixed rules. Your working hours should have dropped by a certain percentage in order or
For you to
financial
access that fund.
to access that fund. And there is obviously, even like the tax return, individual tax return in Australia is self-declared. So that access to your super is also self-declared. So later, if it is found out that you have given incorrect answers or you have lied while in order to get access, you could be penalized and there could be audits performed around that area.
Yeah, I think I saw it in the news somewhere that is around $11,000 fine or something if they are wrongly declared anything for this claim.
There is no, it's very hard to say because this is not a normal feature which happens. This is a once in a lifetime, we have seen these things happening. COVID-19 is once in a lifetime thing we are watching. So it will really depend on what extent the government will do the audits and how many people will be penalized and how many people have done the wrong things. But my message to people is, you are not harming anyone or the government, but you are harming your retirement. So don't do that if you don't need it.
Yeah, don't need it, that's true.
Yes.
If you don't need it, don't access it.
Exactly. It's not an opportunity to take the money out or buy a car or buy things or buy like a meal system or whatever.
That's right.
So
That's
it's
right.
retirement money, don't play with it.
Okay, Rajat. So let's say a person who's age 60 and he's planning to get retired.
Yes.
What about his pension, what he gets after that retirement? Is that taxable?
You mean the pension he will receive from his superannuation?
Yes.
Yes, I will just correct one part of it. I wouldn't comment whether it's 60 because for certain people, the age is 65 now. So I would just tell you in general, once the person has reached the retirement age and they receive a pension, or they can access the whole of their superannuation money tax-free.
Okay.
So they can decide how they want to invest it. Whether pension is a case when you buy an annuity or you're getting an annuity or you're getting a pension from your own super fund, that will be tax-free. Plus, you can even choose to access the whole lot and invest in some property and get the rent. That might not be tax-free, but that might, a retired person is allowed to earn up to a higher tax-free threshold before they have to pay tax.
Okay.
But if the money is just coming as a pension from the super fund, it's tax-free.
Tax-free. Okay, Raju. So let's say a person is not done tax return for 3 or 4 years.
Yes.
Will he be having troubles, or what is the consequences for that?
Again, depending on individual circumstances, but in general, Australian Taxation Office expects you to lodge a tax return each financial year by the due date. So if you haven't done that, and you can end up with a bill, or you can end up they can charge you interest from the due date, or they can even put penalties. I have seen in extreme cases, if you haven't, some people haven't done their tax returns, government does self-assessment, in which case you won't be having an opportunity to claim any expenses for your job and all. They will just do a self-assessment, and the result of which might be higher than what you would have actually gone to a tax agent or prepared and put it on time.
Okay.
So yes, definitely it's expected. So there can be consequences for not doing a tax return by due date every year.
Okay. So let's say a person is doing self tax return.
Yes.
And he's crossed 31st October, which is the usual due date. Yeah. So what penalties will he face, or what are the other options what he has to do?
Again, like I told, Australian Taxation Office is more about education, so they will see his past history and what he has done. Obviously, if he's getting a tax bill and he hasn't done by the due date, interest charges and penalties may apply. The other option is if you are with a registered tax agent for the past year, or if you're doing with a tax professional tax agent again, so you have a longer date to do it.
Oh, so
you can do it by 28th of Feb.
Oh, so if they come to you all,
yes,
and you all have the extension up to the next year.
Financial year 28th of Feb.
Okay.
For any client who is on my client list from past years. Any new client who's coming to me, they have to be added to my client tax agent portal before the 31st of October in order to be eligible for that extension. On top of that, it's always a good idea, even for individual people. A lot of people think doing a tax return by themselves, they have got simple affairs. But it's always a good idea to involve a tax agent because, first of all, the cost is tax deductible, so you do get a percentage of it back in your next year's tax return. Plus, in that situation, you have a contact with a person whom you can talk to about your finances or numbers.
Okay.
Otherwise, if you're doing it yourself, even as a even if you're in a normal job or something, and if you have to ask something, you will end up paying more in booking a consultation with an accountant or tax agent if you just visit them for some other specific reason.
Okay.
A lot of our clients have very simple tax affairs, still they want to come to us just to build up that relationship and have. And I believe, like our accounting practice, when clients do come to do a tax return, it's not only about doing a tax return. We look at the overall circumstance, and we might be advising them at a certain, like you told about the superannuation cost,
yes. Yes.
so the salary sacrifice and all, which might be saving them thousands every year.
Okay, that's good. And if they are planning to go overseas, let's say, and they are not in town or not in the city to do the tax return, how is that situation?
So there can be a couple of circumstances. So let's say they are going for good for a few years and they want to do their tax return. There is provisions in the tax system to do it early assessment, which has to be submitted manually, or with nowadays with the technology and all, they can just ring up their tax agent or email them the information, or even if they are doing by themselves, they can do their tax returns from anywhere in the world.
Okay, because I think now the digital signatures also are helping in processing the papers.
Exactly. They can sign electronically, or if they're lodging, they don't even need, if they lodge themselves, they can just lodge it electronically. Or even if they're using a tax agent, they can send them their tax documents, they can use DocuSign, or they can just put the electronic signature and send it back to us.
Okay. So the next question is, what is the difference between a resident, or is there a difference in the taxation for a resident and a non-resident in Australia?
You mean resident or non-resident for tax purposes? Because resident or non-resident can be different thing. Some people can be on 457 work visas here. People can be on student visas for 2-3 years. They can still be a resident for tax purposes. So yes, there is a difference. The people who can qualify as a resident for tax purposes, they get the tax-free threshold. They get the first 18,200 tax-free, plus they get the low-income offsets and other, whatever the government offsets and benefits are allowed for the resident tax purposes. But people who are non-resident for tax purposes, they get taxed from $1, and they straight away get their taxation rate starts at a higher rate straight away as well from $1.
Okay. So basically, the difference between this resident and non-resident for tax purposes is, I think, there is some duration of time.
There is duration of time. There is residency test. So you have to see whether those people qualify. If someone just came for 6 months and or under 6 months and they might not qualify for a resident for tax purposes. They were only here for a shorter period. So we have to see whether they can meet the residency requirement for tax purposes in order to qualify as a resident. Or even if you're a citizen here. But let's say you were only, in the current financial year, you are here for 3 months and then you left for overseas and you started a job and you were there for maybe, let's say, a few years. The income you derived in Australia in the first few months might be taxed as a non-resident, or you are Australian citizen, but you are working and living overseas, and you have an investment property here, which is deriving you positive income. We might have to pay the tax as a non-resident on that Australian source of income.
Okay, so you say that anybody who's worked here for 6 months and above, they are considered as a resident.
There are a few other tests
threshold
as
is
well.
different. Okay.
And there is also certain other requirements for working holiday visa makers, so which is a bit specific. We have to look case by case. Case by case.
Okay.
But in general, yes, one of the primary requirements is that you have to be in the country for more than 183 days, and there is another domicile test, and there is other requirements. Whether you have a family here, where your kids are going to school, you have a usual place of abode here, or not, or you're just having a temporary and you're living somewhere else and you're just coming and going.
Okay, so there are different.
There are different cases. If you have to go very fine, we have to check it in details.
What about international students? Because we have seen that there are so many students coming from overseas, especially from India. And what is the process they have to follow for getting a tax file number? And first year when they are earning some money, let's say they go and work part-time, earn some money, how that taxation works for them?
So the thing is, it comes first. So once you arrive, you are eligible to apply for a tax file number. So there is a very simple online application. You can go and apply. Because before you start the job, you need to have a tax file number.
Yeah.
So before you go into any part-time or you go to any job, your employer will ask you to fill a tax file declaration. So it's a very simple application. You go online, fill the application, submit it. There might be, depending, I'm not 100% sure, but you might have to go for identification check to either the shopfront or post office or Australian taxation office shopfront, and that's how you can get it. It's not very hard. It's a very simple, basic process.
Okay. And what about their tax returns also? It's same as anybody else. They have to file it every year.
Exactly. Yes. Once you have an active tax file number, it's your responsibility to lodge a tax return every year. If you haven't done any activity or if you haven't derived any source of income, you might be able to do a return not necessary or a non-government advice.
Okay.
Again, you can consult a tax advisor, or if you can do it yourself, obviously there's facilities available for that as well.
Okay.
But it's mandatory to lodge a tax return every year.
Okay. What about people working 2 jobs? Let's say even students also, sometimes they work in 2 different shops or anywhere else. How is that considered? Or
it is always advisable if you are not sure how much you will earn from each source of income. So the basic advice I would like to give is, while filling up the tax file declaration for your second employment, you should always, there is a question which asks, do you want to claim the tax-free threshold from this job? You should always answer it no. Yes, you will get taxed higher. You will get less disposable income from your second job during the year. But at least you won't end up with a tax bill at the end of the year. Because if you claim the tax-free threshold from both the jobs, your combined income might fall in a higher threshold and you might end up with a tax bill. On the contrary, you don't have to worry if you have paid extra tax and your income ended up very low, you will get that extra tax back as a refund at the time of the tax.
So let's say a person is approaching his 51st birthday or something like that. Somewhere there were talks earlier about people more than 55 have their tax percentages reduced. Is that true?
Not exactly again. So there used to be something called a mature age tax offset. So people, once they reach the 55 years and over, they used to get a tax offset of $500, so which reduces their tax liability. But the tax rate is no lower for them. It used to be the same. But unfortunately, that has been removed from the tax system as well.
Okay.
It's not anymore.
Okay. Another question what I have is that presently I think everybody has seen the latest budget, Australian budget. What is the impact of that on tax in Australia?
Now, obviously, the budget this year is a lot keeping into consideration the COVID-19 situation. So the government is doing everything possible financially to help the average Australians in whatever way they can support them. So there has been a lot of changes which has been proposed and is due to pass the legislation very soon. There is a lot of tax cuts coming. So what will happen, the tax rates will be bringing down. So a lot of people on the similar income will be paying less tax compared to what they have been paying past. this was supposed to happen in phases. Like this was supposed to, the tax cuts were due to come in years to come, like 2022, 23. But just to help the people out financially who are struggling with the current COVID situation, the government is bringing these tax cuts a bit forward. But we will come to know the exact numbers. There is information available online on how much is each, like different people in whatever bracket, different slabs are going to get the benefit. The other thing is, if I'm not sure if people are aware, there is a low and middle income offset which has been going on for the last 2 years. Anyone earning between 48,000 and 90,000 gets a tax offset of 180, and above and below it does get proportionated. The government has already announced that they are going to extend it for another year as well, for the next financial year.
Okay. What about, will that impact the present financial year? Like I'm telling about the past one, 2019 to 2020.
19 to 20 already had that low and middle income offset.
No, I'm talking about the budget, what the announcement, what came up. Will that have any?
That won't impact because the individuals won't be getting anything back as far as I know. Because of the changes happening now, they won't be
refunding back.
One of the things which is proposed, again, is nothing to do with the individuals, but government is saying that it might do for the companies and businesses who have suffered loss, and it's mainly to again fight for the economy to fight back and get back in shape. If businesses and companies suffers a loss and made a loss, and if they have paid tax on the profits in the prior years, they will be able to get the refund for those taxes paid. Which will be, but nothing to do with individuals again. This is to do with businesses.
Thanks, Rajiv. So these were the specific questions what I had in mind to ask you. There are more questions for individual taxation. We will not be able to cover all of them now, but if they have any questions, the viewers will write it in the comments and we can reply back to them. We'll consult you in getting the answers back to the viewers. Right. So generally, do you have any advice for tax returns to be done in Australia?
I would just recommend, because people do have a lot of things to claim against their government income and all, but what I have found, people are not very organized. So I would say that they should have a good tax advisor. Obviously they can come and use our services and try. We try to educate people rather than just telling them this is right, this is wrong, and we tell them everything and educate and even help them prepare for the future years. Because there's a lot of things people can claim which people don't know. But once they come to us, we advise them, yes, you can keep a proper record keeping of this and how to minimize tax, or even we even help them with their part, like how to create more wealth using your tax, because if you're paying a lot of tax and all, how to invest in properties and how it can help them around the different areas.
Okay, good. Thanks, Rajiv. So today we talked about individual taxation,
Sure.
And in the next interviews we'll talk more about company or business tax.
Maybe about business tax, it's going to be about self-managed super funds.
Yeah, self-managed super funds. That's another topic what we can look into. And mainly I'm talking about the business because now you see our Indian community here have started going into businesses, and we can see so many people engaging into different types of businesses. So we'll have another session where we can give them more questions or ideas about how it can be done and what are the pluses and minuses and what's the best way of doing it.
Exactly.
Yeah.
Because business clients do more need the services of an accountant, because that's a very important part. They do the business, but they need to have a very good advisor in order to guide them on the right path.
Right.
And it's a big difference. That makes a big difference in the success or failure of any business.
That's
you
true.
need to really have good legal advisors and financial advisors and
accountants, especially to see what are the possibilities of getting their money back from any
sources, or how to plan their businesses.
Yes.
Or how to invest, or what are the right times when to take the necessary steps to invest in the company's assets.
Yes.
So there's a lot of things involved.
Thanks, Rajat. Thanks for your time.
You're welcome.
And we'll meet in the next interview.
Sure, anytime.
Thanks, viewers. Thanks for watching this video. If you like the video, please subscribe, share, and like the video. Thanks again. Thanks from Rajiv and Shankar, signing off for Aussie Tamil Morris. Nandri.